Hi, really good to have you here again. If you are watching this video, you are probably one of those who have experienced, or I should say, one of us who have experienced FOMO. So, no reason to worry. You're not alone. We all have experienced it. Today, I will share with you some principles and corrective actions that are based on the work of top authors like Daniel Kahneman, Brett Steenbarger, Mark Douglas, and their work, as you might already know, is the very top of the world in their respective fields. And it has been a massive help to me over the years. So I'm 100% sure, it will be very helpful to you as well. First of all, please do remember that we don't provide any investment advice and all the material is made available for educational and marketing purposes only. And please remember to subscribe to the channel. That would be a great help. Thank you. Before I talk to you about how to get rid of FOMO, I want to focus on two major problems that traders with FOMO often have. They either chase price or they start to overtrade. So first of all, chasing price means that you are buying after the market has moved higher quite a bit already. That means there's a greater probability that the market is already close to a resistance level that might actually create a pullback in the market and stop you out. And obviously with short trades, this is just the opposite. If the market has dropped big time already, it might be close to support. So keep this in mind and try to find a strategy that allows you to get into those big moves before they actually happen. Don't start chasing price. Then overtrading. If traders have this tendency that they have seen the market moving already, and this happens quite often to them, they start to compensate this by taking lots of trades. And just because you take lots of trades doesn't mean you make a lot of money. It could be actually, and it often is, just the opposite. If you are acting impulsively and from emotions like frustration because you missed that move and that move over there, that's not going to be healthy. It's not going to help your account to grow. Let's talk about the psychology of FOMO a little bit. The biggest problem here is that we see mistakes and missed trading opportunities as threats. We believe that they define us and that they mean we are bad traders. Now, if we believe that missed trades mean that we can't succeed in trading, then basically we live with fear all the time. And that's not good for you as a trader. Let me tell you why. The reason is that fear reduces blood flow from the frontal cortex and increases it in amygdala. Frontal cortex is the part of the brain where all the cognitive functions take place. That's where careful thinking, evaluation, remembering takes place. But then in amygdala, if amygdala is very active, then we are acting from fear, from emotions very quickly. We use intuition, and that system, which is also called system 1, is kind of unreliable. It's actually very unreliable. So if the blood flow reduces from the frontal cortex and increases in amygdala, then the system 2 can't work well, and the system 1 is taking over. If you want to know more about this, watch my video on this. I'll have a link in the description below. And it's kind of needless to say that all this creates emotional actions and more trading losses. Did you know that fear is actually an illusion created by us? Most of the time in life, there's absolutely no reason to be afraid. There's lots of neutral things in our lives, and obviously I'm not talking about somebody pointing a gun at you here. I'm talking about simple things that you see in your life. And that includes trading and charts, and that includes your actions in trading. But we can create feelings of fear by our beliefs. Basically, what you believe defines how you feel. And then your feelings define your thinking and your actions. So if you want to fix your actions, you need to change your beliefs. So if you believe that a trading mistake is a reason to be judgmental against yourself or towards yourself, then you have to change this belief. Here's how you can go about fixing your trading psychology. First of all, you have to have a well-tested strategy that you know well. Basically, it means that you have enough historical data on how this strategy works in up markets, down markets, and sideways markets. Then you don't have to be correct with your timing. Instead, you can scale into your trades. So that gives you the opportunity to monitor the market, and after each clip, you have more information on how the price moves. Say, for instance, you decide to have a risk of 2% with this trade. You could scale in with 4 clips, 0.5% each, and this allows you to see how the market behaves, whether your trade idea is likely to work out or not. Then the third way of reducing anxiety and fear is to trade small. You can drop the belief that you have to be a big trader. You can just trade really, really tiny trades so that you get used to the idea that there'll be losses every now and then, but you also get used to seeing your strategy working well over, say, 100 trades. And this allows you to increase your trade sizes gradually without feeling the fear. You just have to change the belief that you would need to be a big, massive trader from the get-go. Then stop trying to make money. This is also highly, highly important. Stop trying to make money and make learning the most important thing in your trading activity. If you make learning your motivation, then you can think of ways, or your focus will be on getting better in trading instead of making money. That will make more money over time for you. You can use the 30 trade technique by Mark Douglas. And that basically, his system is that you decide your trading rules and then you execute them 30 times flawlessly. And after those 30 trades, you evaluate the results. If you like the strategy, you keep on trading with it, another 30 trades, and maybe you increase your size a little bit. But if you don't like the strategy, you can go back to the drawing board and think why it wasn't working. Remember, it's not you that fails if you follow the strategy. It's the strategy that fails. Thank you for watching. I earnestly hope that you will go and study these concepts further and see how you can apply them in your trading. They certainly have been helpful to me, and I'm so sure that they will help you too, if you just work hard on them. So, see you soon and trade safe.